Okay, these are some problems at the level 1 difficulty setting. First of all, match the following terms with statements. We have accounting, liabilities, assets, net loss, corporation, retained earnings, accounting equation, dividends, expenses, balance sheet. Number 1, the process of identifying, recording, communicating the economic events of a business to interested users of the information. Well, that would be number 1, accounting. So we'll just put a 1 there. Number 2, debts and obligations of a business. Well, liabilities. 2. Number 3, resources owned by a business. Those would be the assets. So we put assets in there. The amount by which expenses exceed revenues. That would be a loss. Number 4. Business organized as a separate legal entity having ownership divided into transferable shares of stock. So that would be a corporation. Corporation, number 5. Okay, the amount of net income kept in a corporation for future use, not distributed to shareholders as dividends. That would be 6. Retained earnings, RE. Now, the amount of net income, assets equal liabilities plus shareholders' equity. That would be the accounting equation, number 7. Payments of cash from a corporation to its shareholders. Well, those are payments in dividends, so DIV, dividends. The cost of assets consumed or services used in the process of ongoing operations to generate resources. Those are expenses. And lastly, the balance sheet, number 10, BS, stands for balance sheet. A financial statement that reports the assets, liabilities, and shareholders' equity at a specific date. Next, we have multiple choice questions. All of the following are characteristics of a sole proprietorship, except a business owned by one person. No corporation can be owned by one person. Owner has control of the business. Well, yeah, the owner could be a corporation and one person and have control. A separate legal entity? No, that's not what a sole proprietor is. So the answer here is C, small owner operated. Obviously, that could be a sole proprietor. All of the following are characteristics of a corporation except, watch that, a separate legal entity. No, corporation is a separate legal entity. Ownership evidenced by shares of stock. No, that's what a corporation is. Corporation produce more revenue than sole proprietors and partnerships. That is true. The owners of a corporation have unlimited liability. No, that's not true. They have limited liability. That is, they're only liable for the amount of money they purchase the stock with. They cannot lose any more. 3. Corporations may issue several classes of stock, but the stock representing primary ownership is common stock. First one right off. Retained earnings? No. That's what's left over after paying the dividends, financing, dividends. 4. Resources owned by a business and used in carrying out the business activities. Liabilities? No, that's what we owe. That's what a business entity owes. Shareholders' equity? No, that's what the shareholders have put in. Revenues? No, that's what a company earns by providing its service. The answer is D. Assets are resources owned by the business and carry out activities. 5. The terms used to describe the total assets that Starbucks receives in exchange for its coffee is cash. Well, they could receive cash, but they can also get paid later. So the term used to describe what they receive in exchange, they can receive accounts receivable. So it's not just cash, not inventory. It could get an accounts receivable or cash, but the term we're going to use is revenue. They earn revenue. Starbucks earned revenue by providing that service. They could either get cash or accounts receivable. 6. The financial statement which presents a picture at one particular point in time of what a business owns and a business owes is a balance sheet. Not an income statement or retained earnings, but a balance sheet. Okay, net income shown on the income statement is added to the beginning balance retained earnings in which statement? Not the income statement, not the balance sheet, not the statement of cash flow, but the retained earnings statement. To report the success or failure of a company's operations during the period is the purpose of the income statement. The ending balance in the retained earnings is shown in the income statement? No. Statement of retained earnings? Yeah, it's shown there. It's also shown on the balance sheet. So the answer is D. Which of the following is not a correct form of the accounting equation? Assets equal equities? No, liabilities are also called equities. Assets equal liabilities plus shareholders' equity? No, that's true. Assets minus liabilities equals shareholders' equity? No, that's true too. If I subtract liabilities from the asset, I have what the shareholders put in. The answer here is D. When the stockholders invest cash in the business, what is the effect? Liabilities increase? No, we invested cash in the business. So that's an asset. Assets and liability? No, it's not a liability. Assets and shareholders' equity increase. C. When a service is performed on account, what's the effect? Well, I can get cash or I can get accounts receivable, but if it's report on account, that means I'm getting an accounts receivable. So both accounts receivable and retained earnings will go up. Right, so again the answer is C. So for all these problems, what you could have done is pause the button and then do them yourself, or you could have copied them from the file that would be presented in YouTube.